I think as an entrepreneur at heart, one always has ideas all the time. But I think I've always seen shortcomings often in ideas, often before I've started, or at least challenges. And with this, I'm really excited by it because it's taking an approach that is really scientific. You know, it's taking the emotion out of innovation and innovation building. And I'm really excited about it because it's exactly how I see, you know, if I'd had the opportunity to do that with my own startup adventures within this context, then they would have had a chance to succeed on a level that, you know, they didn't, you know, they could have potentially been way more successful.
In today's episode, we sit down with Caroline Kendal, an entrepreneur launching her third venture with a co-founder, and a radical idea about how innovation should be built. She's not chasing the next shiny startup, she's investing in the engine, the venture studios that assemble companies with discipline, documented playbooks, and a factory's focus. Imagine a quiet room where ideas are stress tested early, and if they don't work, they cut without ceremony, no ego, no drift, just clarity. Her platform backs multiple studios, each tuned to a different frontier, all designed to build what the market actually wants. Because sometimes the bravest move isn't bigger bets, it's better systems, and the courage to let what's not working go. Let's get into it. Caroline, welcome to the One Away Show.
Thank you. Thank you for having me.
Yeah, thank you for being here. So, Caroline, what is the one away moment that you want to share with us today?
I could share any number of moments with you, but I suppose it would be great to tell you more about what I'm doing right now and what motivated me to get here.
I would love that, please.
So I'm launching my third startup together with a brilliant co-founder. And it's in a pretty exciting area in that we're investing in a fairly new asset class. And really as a response to where the investment industry has got to, with venture capital being the way it is. So we've launched a very different and very novel platform to invest in a new asset class. Motivated really by my experience of VC and investment, both from the perspective of being an entrepreneur, but also through my recent work working with really super interesting high net worth investors. So whilst I am an entrepreneur at heart, I think about entrepreneurship with the investor's interests at heart.
Yeah, that's amazing. Well, first, it's you can see it from both sides, because I think sometimes the entrepreneur is starry-eyed and doesn't always see the investor perspective. But investors, you know, the way the models are today, to your point, you know, there's probably better ways. So speaking of the new model that you are innovating on, what is different? What is so new and unique?
So really, most recently, I've been working in VC, and whilst I love innovation, and the world always needs innovation, we all know that, you know, there are thousands upon thousands of VC funds, around 10,000 now, I think. But of that 10,000, only around 90% of them, around 300 of them, are successful. So out of, you know, the actual numbers are crazy. So you've got 300 funds producing any kind of profits, and so 95% investors can't even access those funds. So you've got this broken model where investors want to get into the highest performing funds, which they can't, and only a small proportion of the huge number of funds in existence actually have any returns, which compared to what VC was like many, many years ago, where it was entrepreneur-led and you had a small number of funds and a small number of GPs. Now the whole area has sort of gone out of control. And so I felt that there must be a better model for investing and creating new innovation, and really giving the investors access, the best investors access to it. because right now the best investors are not necessarily accessing the opportunities. And from the point of view of a founder, you kind of want to have the best investors investing in you. And from the point of view of the LPs, you want to give them opportunities where they can not only invest their capital, but also the brilliant know-how they bring. So we've decided to invest in an asset called the Venture Studio, which in simple terms is a startup factory. It's an entity that builds startups really through a very structured, very process-driven way. There's lots of elements to what a venture studio is, but essentially it produces startups that are not only effectively built, but they're pretty much they are what the market wants. It's a model that can attract investment from a whole array of investors, and it pretty much emulates what VC was when it first came about many years ago. It's very entrepreneur-led rather than finance professional-led.
Yeah. So what I'm hearing you say is you're starting this venture studio to really spin up multiple startups and then bring investors into those companies that you spin up, where you have the relationships, but you have some control over the companies that are kind of spun up that can be invested into.
But actually, it's different from that, because actually what we're looking to do is not just invest in the portfolio companies they produce, but actually invest in the factory itself. So a lot of these venture studios, and let me tell you, there are a lot of entities out there that call themselves venture studios, but they're not actually. They could be incubators, they could be accelerators, they could actually be funds that have a lab or the early, very, very early stage funds. But a venture studio really is not only an entity that has the founders in it, the capital to produce the startups and the kind of the operational know-how. It actually has a very strict playbook. The processes are very much documented. So it's kind of there aren't that many of them around. I'd suppose there are probably around 1,000 that call themselves venture studios, but probably around 300 which actually are. So we're not looking to invest just in the portfolio companies that they produce, but rather the core, the actual engine that builds the startup, so that ultimately we're invested not only in their successful startups, but in their potential portfolio down the line. And we invested, along the way. So we actually might exit to investors who actually just invest in the portfolio companies.
Interesting. Got it. Okay, that makes a lot more sense now. So with this venture studio that you're starting, is there a specific types of companies that you're in a specific area or vertical or type of technology? Like how are you thinking about the companies to start that you want to roll out? So
we've set up a platform that will invest in a range of different venture studios. And there are different types. So we're the platform that invests in.
Oh, okay. That makes so much more sense now. All right. So you're the platform that invests in the studios. Okay.
I mean, we may down the line be asked to set up a studio, but we right now invest in different studios. And there are probably three types of venture studio. There'd be deep tech or hard tech venture studios that tend to produce platform technologies, and they cross over multiple sectors, multiple verticals. There'll be sort of new technologies that can be applied across different verticals, and that is one. So the way a studio operates and what makes it interesting is they come up with the ideas and build the startups, but very, very cheaply, very cost effectively. And actually, if something's not working, it gets binned very early on. When tens or hundreds of thousands have been spent and not millions. And they can build and rebuild and rebuild. So you got your deep tech, which is sort of across verticals. Then you may have a studio that's very much an expert in a vertical, whether it's, say, manufacturing, and it will build startups that solve current issues, or market or build startups the market wants within that vertical. And then you have others, which you kind of might have heard of, where they take a very proven business model, say something like, we have it in England, sort of Uber Eats or a food delivery company, a model like Walt or Uber Eats or Delivery Hero or whatever, in a market, and just replicate it across different markets. But that's much more of a proven technology. So you've got your deep tech studios at one end and your kind of proven technologies, and then you'll have studios like Rocket Internet, which you might have heard of, that takes a proven model and just introduces it in different markets.
Yeah. Okay. So it's super interesting. I'm starting to really track and follow you now. So here's my question for you. So you're basically saying we are the firm and fund that's going to invest into venture studios. What's like the market today? Like, where are these venture studios right now getting their capital from? Right. And then why, and how are you getting in front of them? And what's the pitch to them for why you should put your capital into their firm?
So my co-founder is a very interesting fellow who actually was the founder of one of Europe's very first venture studios back in 2011. So he founded and built in Russia one of the first deep tech venture studios, which he grew to be incredibly successful. And the studios that we're speaking to, he's essentially, for the most part, involved with them as a consultant already, and they actually want us to be involved and want us to be more involved, because his expertise really lies in actually building, growing, scaling the actual studios, and also exiting the process of exiting the companies that they build. So he's considered an industry expert in actually the formation and scaling of venture studios. He's done it himself back in 2011, when really they didn't exist. Where studios really work are in ecosystems where there may not be a huge number of entrepreneurs, or there may not be a huge amount of investment capital floating around. So probably not Silicon Valley or somewhere like Tel Aviv, or in some of the big cities where there's a huge amount of capital flowing. But in other cities where there's probably a smaller proportion of entrepreneurs or a smaller proportion of capital, where naturally the entrepreneurs themselves are kind of more collaborative, and say to themselves, well, I could launch another startup myself, or I could build a startup myself, or I can build a team around me and or build this sort of structure around me and attract capital that way. And really the areas where we're looking at are studios that we already know, through Dennis's involvement, and in ecosystems where actually the model really, really works. If you take your typical venture studio founder, he or she is not going to be a big ego. They're going to be a founder who, and many founders are like this, who appreciate that they're not, they have limitations, and actually they favor collaboration over celebrity. So you'd never get Elon Musk forming a venture studio, but really successful.
Tell me more about that. Like, why?
Because they don't necessarily, the superstars who can or want to do it themselves wouldn't by definition build a studio, because the studio actually you're collaborating from day one, and you're starting with the team, and then building or having the ideas. So you're actually building the team around you to generate the ideas and then build the startups. So they're not really for the lone stars, and also they're very, very process driven and very scientific. There's no real room for emotion in a venture studio. You start with an idea very quickly. If the idea is not working, you kill it. You either pivot it or develop it, or you just get rid of it. And really, venture studios really work in a kind of collaborative environment, and so that the big egos don't necessarily collaborate. I know from my experience, I've been an entrepreneur twice before. I searched out a team. I kind of wanted that collaborative environment. To be honest with you, when I had my first startup, that there wasn't the studio concept didn't really exist. I was interviewed recently by someone else who said, if I had my time again, what would I do if I was going to start my own startup? I would want to do it in the context of a venture studio, because the collaboration is super important, but also means that, you're not going to have too much reinvention of the wheel. You're going to see the shortcomings from day one. And to be honest with you, some people are natural collaborators, others not. Doesn't mean that you're not, aren't going to be successful. It's just the way you're built.
So what you're saying is, if you were to start a startup again, you would start it within a venture studio model because of the collaboration, perhaps the built-in processes, the systems. And are you also saying perhaps like a higher likelihood of success because of like you're starting it with individuals potentially who have gotten just a lot more shots on goal and starting different types of companies? I
think so. If I look at my own startups, each one developed into something slightly different from the idea I originally had, which kind of happens within studios. So I wasn't fixated on my idea, and they did transition. The business model changed, and I sought out a team very, very, very early on. And really my motivation in my previous startups, and really my motivation with Summit Studio is, not because I want to change the world, but because I think whatever process I'm looking to do, it's a better way of doing what's being done right now. So for example, from the point of view of investing in innovation, I see that the venture capital model is broken. It really works well for the general partners. It's brilliant for them. They take great management fees. And for the most part, when I hear of funds that make money each year for their internal teams just through charging fees, but they never sort of invest in a successful company, the model's wrong. Or if VC has to find, if the funds have to kind of find the next unicorn in order to get a return for the investors, that feels wrong too. And so my motivation always with all my startups has been that there's got to be a better way of doing this. And the better way of doing this in terms of the model can transition or pivot into something else. So, by not getting fixated on anything in particular and kind of wanting brilliant people around me, that model really resonates to me. And I would, if I wanted to do a whole startup again, I would want to develop that idea within a studio. So investing in studios right now feels like the next best thing.
Yeah, I got it. I think it's really interesting what you're sharing. And I think I'm also hearing you say is not only is the model better, but you're de-risking a lot of things as well, potentially for the entrepreneur and the studio at large, because it's just the setup of how these models function. Are there any data points on venture studios being, like, from a numeric perspective, more successful than venture, like general venture funds? Like, is there any like things that you've seen that like kind of explicitly state that
in terms of data?
Yeah, I'm just curious.
I mean, ventures. I know it from the experience of Dennis himself, where he, his studio built 120 startups, and using around 100 million of capital. So in terms of, and these were all effective and successful startups. And looking at the studios that are out there and what they're building in terms of their portfolios currently, in terms of what they cost to build and the valuations they have, I'm starting to see exits. And there are studios out there doing phenomenally well in terms of the valuations and also in terms of the actual cost, the cost of build. It is a new area, so it is not necessarily, for those who are not interested in looking at new asset classes. But actually, when you look at the model and the actual, the business models of these studios, and you look at their existing portfolio, then for the most part, the ones we're looking at, they've kind of at that inflection point. A few years down the line, we'll see more accessible data, but by then their valuations will have gone up, understandably. Interestingly, how studios come about, they tend to come about with founders' own money. You'll one of the typical ways are serial founders. They have their team. They've taken from startup to startup. They have their kind of playbook. They have either their industry focus or their sort of tech expertise. And if they have that strong playbook, that repeatable, reliable, repeatable process, then effectively, they are a studio.
You're talking about repeatable processes. If you have founders who have done things, essentially they are a studio in and of itself, but it sounds like what you're doing is
we're investing at that inflection point. So basically we're looking at studios that they've built a few portfolio companies already. We've looked at their playbook, we've looked at their processes. They have got that structure in place, and they've got the good, strong operational teams, whether they have founders in-house or whether they have a process for bringing founders in to run the startups. All the kind of the building blocks are there. And for the most part, a lot of the studios we're looking at, these are not opportunities that are out there in the market. These are not opportunities that are going to land on every investor's desk. They're making room for us precisely because they're at that scale stage. They've worked out their process. They've worked out what they're doing. They now want to get from, producing maybe 2 or 3 startups a year to producing, 10 or 15 startups a year. And for that, the technologies are all there, but it's, how do you do it? And also it's how do you exit them? It's not just a question of building a company, selling it on. We look at a studio as really being a pool of equity as well. Studios tend to own the majority of the equity in the startups they produce. Obviously, founders will take some, and there may be some external investment at any point in particular startups. So they're pools of equity, and knowing how much to sell, when to sell, what stage to sell, to actually and still retain a sizable majority or even a good minority in their startups is a science as well. So with a studio, you've got your brilliant tech guys and your brilliant geniuses who will come up with the brilliant ideas, but actually running the studio, knowing how to actually scale it, exit the portfolio companies comes from kind of a brilliant know-how in the operation of the studio itself. And that's where we come in, and we invest when they're about to hit that inflection point. And they're making room for us to come in, whether it's secondaries, or whether the founders themselves are just creating some more equity for certain investors to come in.
Right. So, like, for instance, and I'm just curious, if you're investing when studios are about to exit certain portfolio companies, and this is just interesting, I'm super curious. If they're already going to bring in a lot of liquidity into the studio because of certain portfolio companies that can exit, why is that a good time to bring in someone like you to invest into that studio?
Because in the early days, the way studios tend to work is the early exits, they tend to reinvest back into the studio. But the studio founders, for the most part, are brilliant entrepreneurs. I mean, that's what encourages them to build a studio. They're brilliant entrepreneurs, and they're brilliantly collaborative, and they've got good systems they build good teams around them. But when it comes to, for example, like in any industry, you could be great at founding the business. You can be great at getting it from sort of, Series A to perhaps Series C, but by turning it into a really big sort of startup creating engine that really is creating businesses and exiting businesses, but as a kind of process, turning it into a big manufacturer of startups, you need to have people in there who really understand how to do that. And there are very few industry experts because not that many studios long-standing studios are in existence. And so that's where we come in, predominantly with my co-founder, in that he's done that. He's built a studio that actually produced over time 120 startups. So he's done it. And he can recognize where studios need help in actually becoming more effective producers of startups, because actually the technology itself is not always the determining factor. You've got to kind of know when to kill an idea generally, or when to sell a business. And because these studios tend to produce their startups very, very cheaply, they can also sell them quite cheaply. One of the key sort of exit strategies for studios is startups. Is sort of R&D. Because, we're building startups that potentially could be sold for 20 million, 30 million. That's effective for tech companies who actually, need that expertise, or for corporates that need that additional tech within their companies. But that's cost effective, and it's more cost effective to build to acquire studio produced startups than to invest in internal corporate R&D. And so in terms of, the building itself, rather than the tech, we don't claim to be experts in the tech. The studios are the experts in the tech. We know how to take the factory. They know the product. We know how to operate the factory, and how to make the factory a better operator.
I see. Okay. This is all making a lot of sense. I get it. Super cool. If you're a founder looking to grow without raising capital or giving up control, Relent is built for you. Founded by entrepreneurs who've scaled without outside funding, Relent helps companies find and retain talent, lower operational costs, and reinvest in growth. We've hired nearly 10 team members through Relent and streamlined our entire cost structure, freeing up capital to put toward what matters most. Even small teams can set up offshore operations quickly, compliantly, and without heavy infrastructure. With deep expertise in the India-US corridor, Relent combines cultural fluency with operational rigor and guides everything from team design to long-term scaling. Grow on your terms and start with Relent. To learn more, visit relent.team/arcbound. And within this new chapter of yours, Caroline, what's going to be kind of your role and your partner's role, kind of how are you guys delineating kind of who does what? Just because I'm curious.
Well, interestingly, I think we bring different things to the equation. We were actually introduced by a successful GP here, where I've been working, who actually is quite forward thinking as a GP, in that he has a fund where he tries to align with investors. And I've been working with him on various different projects, and but always bemoaned the state of VC for investors. And in my head, I kind of built the platform, which was a means of investing alongside VCs, which was great. But I worried about how they source their startups, because it's very difficult. There are a lot of great startups up there, or startups that look great, but a lot of them seem to do the same, and the market is just inundated, and there's very little collaboration, and it's all about who gets there first or who gets the best investor. So I was always worried about the asset class, and I was introduced to Dennis, who had built this brilliant asset class. So we sort of combined my platform with the asset class. He's very much the venture studio expert. So his loyalty is always to kind of, he's very good with the entrepreneurs of the studios, the founders of the studios. That's where he works, the actual workings of the studio. And I, in my most recent past over the last 10 years, have worked with investors. And so we're being very selective about the types of investor we approach. We're doing this in a very investor focused way, in terms of investor interest focused way. So we're not setting up as a fund. We're not pooling any capital. We're presenting opportunities on a deal by deal basis, but really to specific investors who could be interested in them and who could bring something else to the party. I think a lot of investors get frustrated with VC because they write a check, they never see their money again, at least not for at least 10 years. There's very little input they can have, whereas a lot of the time they've got plenty that they could offer. So with this, we're essentially bridging the opportunities, the studios with the investors. And we're actually matching the investments to investors by what, they could be interested in and where they could add value. So I'm very much aligning myself with the investors, and my co-founders very much aligned with the entrepreneurs. And so we've got everybody's interests at heart here in our approach.
Yeah. Seems like a really well thought through idea. And I've never met someone who's focused just on investing in the venture studios and the understanding the inflection points of when to invest. But it sounds like you and your co-founder or partner Dennis are a match made in heaven for sure, where your talents can really speak to both sides of the table in a very meaningful way.
Hopefully. And to be honest with you, we potentially there could be scope for another venture studio in the mix, but we'll see. It's super interesting. And also, it becomes even more interesting because by investing in studios in different jurisdictions, we're also beginning to kind of create an ecosystem where the studios then collaborate with each other. And if you bear in mind that each studio could potentially produce anything between 50 and 100 startups over time, if you've got collaboration on the studio level, and then deeper, which is where I'm a big lover of collaboration, and actually getting the individual portfolio companies to collaborate, and you're talking about across different jurisdictions, then you've created this whole ecosystem where there's no reinvention of the wheel. We're producing startups most cost effectively that the market actually wants. And we're dealing with all these challenges that often are deal breakers for startups in that, how do I access a new market? How do I access a complementary technology? We're doing that already from kind of day one by actually producing this collaborative ecosystem between studios in different ecosystems and the portfolio companies within those studios.
Yeah.
So that's the exciting bit for me.
Yeah. I also like what you said about, you're not kind of throwing dollars at bad problems, or you have more ideas of like what's working and where to actually point the gun with money. And you can do things at an efficient level. That's great. What are you from like career perspective as you kind of enter into this next chapter? Like, what are you most excited about yourself, or has gotten you the most like energized from this early work?
I think because this really is, I think as an entrepreneur at heart, one always has ideas all the time. But I think I've always seen shortcomings often in ideas, often before I've started, or at least challenges. And with this, I'm really excited by it because it's taking an approach that is really scientific. It's taking the emotion out of innovation and innovation building. And I'm really excited about it because it's exactly how I see, if I'd had the opportunity to do that with my own startup adventures within this context, then they would have had a chance to succeed on a level that they didn't. They could have potentially been way more successful. And it's not enough. There are a lot of startup supportive environments like the incubator, or that looks to sort of develop ideas, or the accelerator that will take a startup and give it support along the way. But it's kind of not enough. I think the way the ideas get developed and generated is really how we need to approach innovation. And this to me is exactly what I would have wanted to do, and so it's very easy to get behind it. So it's my third journey, and definitely the most exciting. And to be honest with you, when I had the idea to build a platform myself, the thing I really love having is a team around me, and a co-founder who doesn't sort of necessarily agree with you all the time, who comes from a completely different angle. And when I met Dennis, we immediately hit it off. We come from two very different parts of the world. We've approached the same problem, but with a different solutions, which makes the idea of combining the two even more interesting. So there's a famous, fairly well-known entrepreneur who actually founded the traffic app Waze, which I think people use all over the world, who always says, fall in love with the problem, don't fall in love with the solution. And I've been obsessing about the problem for many, many years, as has Dennis. And so I think that brings us together in terms of the solution we've created, which could yet develop. So, we're not fixated on it. We're not fixated on our platform. But we're fixated on fixing the way innovation gets built, and the way innovation gets invested in, so that both the entrepreneur, the founder, and the investor all benefit equally.
Yeah, I like it. I like it a lot. I can hear your passion for the problem. I'm glad that you've found something that you can fully kind of throw yourself into, because like the problem and the way you're thinking about solving it, it sounds like there's a good marriage between those two now. The right pieces are coming together to bring this to life. So I really appreciate your perspective and also knowledge on Venture Studios. One more question for you, maybe from your learnings from Dennis and maybe just even working with investors. When you've seen successful companies come out of Venture Studios, or companies that you've learned about that have been successful that have come out of Venture Studios, what's been maybe apparent to you or Dennis in regards to what yield or what brings more success of companies that are incubated from Venture Studios?
I think because studios themselves, they have the whole team inside, and the founders are the founders of the actual. You got the founders of the studios, and then the founders they place within the startups. They know that they are very much all united in terms of the ultimate goal, and the ultimate goal is to produce a cost-effective startup and to sell it to the best, to the most appropriate acquirer. So no one's going to get greedy, and no one's going to get suddenly develop a massive ego or turn around and say, actually, we want to sell it for twice that or thrice that, because the studio itself is going to keep producing more and more. It doesn't get actually obsessive about any particular startup it produces. So it works because it actually behaves like a factory that is producing a product. And when a product worked, it'll just produce more of that same product. And so there's no kind of unnatural attachment. There's no founder who thinks that he or she, shouldn't step away. That often happens, sometimes happens with startups, that the founder is great up to a point, but then needs to know to sort of step back. There's none of that, because everybody's on the same hymn sheet, singing from the same hymn sheet from day one. And that from day one, you're going to, go from A to Z, following this process. And when you get to Z, you sell the startup, and along the way, you may sell pockets of equity. And this is why the studios we're talking to want us to come in, because they want help on that operational, on that structural journey. So they themselves are showing themselves not to be, not to have big egos, not to be fixated on any, not to be fixated on a particular journey, but on the right journey. And the right journey is building effectively and exiting, not, at a good valuation, frankly, when the company is attractive to buyers, because you're going to have a good margin. You're going to have done well. You're going to have a good multiple, on any exit when you've built your business very, very cheaply. And the beauty of it is, once it's worked, you can replicate it time and time again, and keep doing it. So yeah. I say, what troubles me and what's troubled me, when I had my own startups and I talked to VC funds, they were chasing unicorns even then. They may not have been unicorns, but they were chasing the huge exits even then. And it's kind of pressure for the entrepreneur, but it also feels a little bit unrealistic, because there aren't going to be that many. And very few funds are going to be lucky enough to have invested in those that become unicorns.
Yeah, I like it. I also love what you're talking about, the emotional side of this, and venture studios not only maybe de-risk by the pattern matching and repetition, but also the emotional side of it because of the way they're set up, and they're not just going to get so overbent on one idea, where they have a little more optionality and they can kind of compare and contrast and kind of know when to shut things down and when to keep going. So that's yeah, I think that's great. So what have I missed, Caroline? What are things that I haven't asked you as we close out here? I sense you've given us a phenomenal education and snapshot into what's ahead, but bring us home.
Oh my gosh, we're still recording. So what else would you like to know?
Well, if there's anything I left off, if there's anything that we haven't brought to life that you think is important to shed light on.
Well, I suppose if there's any message that your listeners tend to want to hear, is there any kind of particular question some of them might have?
I think
are they mostly founders? Are they going to be investors in there? I mean, people with what kind of mindset?
Yeah, I think they're more founder driven for sure, but I mean some of them definitely put money behind things. So yeah.
Yeah, I mean, for my part, in terms of being the founder, what I love about this model is the lack of it's not emotional. I think also working with Dennis, who's Russian, and maybe by definition Russians, they're quite direct, which is very, very good. All the emotion, all the passion should be in the kind of ideation. That's the early stages. But I think what's really wonderful about this, and it's kind of a great message for founders, is then trying to cut out the emotion, and we've all been there, those who have been founders, maybe whether it's the actual core business model, core business or aspects of business where we've really wanted something to work and we've worked at it and we've known in the back of our heads that maybe something's not working, but we've invested so much time and we don't want to give up on anything that we've had that much passion or put so much commitment into. But I think that, this is a very good, what it's shown me is actually, there's time for the passion and there's a time for actually taking a very sort of operational, scientific, strict approach and killing things when they're not working rather than, further down the line. And, really learning to be quite disciplined. That's what I really love about this, that it's a kind of very disciplined approach to innovation. Because, there are lots of wonderful startups out there, but they may not be what the market wants. Or there may be others that are further advanced that are doing the same thing, but more cheaply, whatever it is. And I kind of like this. I like the passion at the start, but also the very scientific disciplined approach. And I think that's probably a good message for most founders. Which is why if I had another, startup idea, rather than an idea of how to invest in startups, then I would definitely want to do it in the context of a studio. I mean, one of my kids is a software engineer, and I would always encourage her to go and work within the context of a studio. That'd be far more exciting because we're working on lots of technologies at the same time.
Yeah, that's awesome. I like it. I like it a lot. It resonates with a number of things I'm up to right now. So I appreciate, this is a education I didn't really know I needed, but this has been super helpful. So thank you, Caroline. I'm excited for you, excited to follow the journey. Where can people find you, reach out to you, and get more involved with what you're doing?
Brilliant. Thanks, Brian.
All right. Thank you. What lingers from Caroline's journey is a gentle directive. Pour your passion into the spark, then protect the build with discipline. Cut the noise, kill the almost, let the right ideas breathe. Collaboration over celebrity, a calibrated machine over a single heroic tale. And when studios connect across borders, the learning compounds. Teams swap know-how, products travel faster, and wheel reinvention gives way to momentum. The work becomes a rhythm. Design, test, release, repeat. like a factory that knows how to make more of what works. If this story moved you, share the episode with someone who needs it. New episodes of The One Away Show drop every Tuesday and Friday. Sometimes one moment can change everything. I'll see you in the next one.